Today, we've got the pleasure of interviewing David Woo. David is the founder of David Woo Unbound and has had extensive experience on Wall Street with the IMF, with a lot of financial institutions such as Barclays Capital, Bank of America, and other institutions. David actually also has just released a book called Merry-Go-Round Broke Down, which is a New York Times bestseller. And it essentially explains or shows a lot of global economics to those that are not as familiar with how it works, and really makes it kind of an interesting topic. So, David, welcome to the program. It's great to have you here. We're going to talk about lots of topics to include technology and your views on the global economy and investment opportunities. So welcome to the program.
Great. Thanks for having me. I just want to say, make a small correction. It's not a New York Times bestseller, but USA Today bestseller.
Oh, my mistake. Sorry about that. Yeah, great. Good point to bring up. And apparently it's had Kirkus reviews too. So that's fantastic. What I want to do is start out really with your outlook on kind of the global economy. And, our employment numbers came in much weaker than expected here in the US. And then the inflation numbers were in line with expectations, although there seems to be some weakening. But with that as a backdrop in the US, what is your prediction as far as the global markets within, say, the next 3 to 6 months?
Yeah, I think in general, I'm pessimistic. Actually, I just want to say, and I think it has nothing to do with the labor market showing signs of lost momentum or whatever. I think none of that is that important. My focus this year, like most of my macro, institutional clients, has been just two things: the war in Iran and basically the AI bubble. Okay. And I think from that point of view, and I've been saying this for a long time, which is that as much as Trump wants to tackle, Iran is going to make it impossible for Trump to tackle. To the extent that I think Trump completely underestimated the Iranians before he launched, the war back in February. I think it is very clear that the U.S. ability to sustain in this war is limited both militarily and politically, and Iran gets that. And then, in fact, we just saw essentially the appointment of some of the real hardliners to very senior government posts this week, which, in my humble opinion, is drive home the point that Iran is going to demand a total defeat of the United States. Okay, or so from that point of view, I think this is an important thing, which is Trump is now facing a very simple choice. You either accept total defeat or you escalate. And as much as I think Trump is, I think, courage is not it's not his strong suit. I think that he cannot allow himself to go into a history book as the president who accepts total defeat. In fact, I think that he might even get bumped off by the military-industrial complex if he even tries. Because, again, what Iran now is demanding in order to reopen the Strait of Hormuz is unconditional release of all Iranian frozen assets. They want total, basically, removal of the blockade on Iranian oil exports. They want essentially dropping all sanctions as far as related to Iran. And most importantly, they're demanding war compensation from the United States. Okay. So from that point of view, if Trump were to, as we said before, Trump has a whole history of tackling, because at the end of the day, he makes more noise than he actually has the courage to carry out his basically agenda. But given that he is so concerned with his public persona, the image, how he's going to be perceived by historians, I just cannot imagine he's willing to actually take on the mantle as the first American president to accept total defeat. What does that mean for his entire MAGA agenda? So I think from that point of view, Trump is not going to be able to tackle, okay? And then he'll have no choice but to escalate. And therefore, in my humble opinion, is that oil price right now, we're trading in the, sort of the high 90s on Brent and the mid 80s for WTI. My view is that prices are going to hit higher. Now, until now, of course, there's no doubt that the release of strategic reserve under Trump has helped save the day, so to speak. You saw the number this week, the early release on Monday. Actually, U.S. strategic reserve has now fallen below 300 million barrels per day, okay, which is like the lowest level in 50 years, whatever it is. He can keep that going. And I think Trump has no qualm about like what he's going to leave for the next president, whatever. He's going to keep releasing. But guess what? The capacity, the real capacity limit is probably around 200, 150. In other words, at the current run rate, Trump can basically keep releasing the strategic reserve for another 3 more months. That's it. So from that point of view, I understand Trump is now worried about losing this war. I mean, all we know here is that, as a lot of your viewers, I understand a lot of you guys are former veterans. You probably know this as much as I do, which is the fact in the first 5 weeks of the war, the U.S. ran through 10 years worth of supplies of Tomahawks. And that's what happened. This is why I think Pete Hegseth should be fired, needs to be fired, because clearly this guy has no idea what he's doing. Okay. But nevertheless, right now, the U.S. is confronting the situation. And then what's interesting to me is the fact that Dan Kane, the chief of, the chairman of Joint Chiefs of Staff last week declared that either, because he believes that, that air bombing is not going to, move the needle. So he's saying that either let's find an off-ramp, in other words, TACO, or we'll have to escalate, which includes deployment of ground forces. And I think that is what is really coming out. I would say deployment ground forces or use nuclear weapons, which, I'm sure Trump would consider that as well, if that makes it easier for him. But the bottom line here is that, to me, I think this current situation is one that's not sustainable. And I think Iran's got the upper hand. And I think from that point of view, I think oil price should go higher. If oil price goes higher, this is obviously going to be bad for, a lot of things. Bad for bonds, bad for stocks, as we've seen, even bad for gold, as we've seen earlier in the year. So I think that is something that I still think, again, I don't think you can really form a sort of a holistic view about the investment environment without taking a view about this war, which is clearly, at the front of Trump's mind, and it should be on the top of everybody's mind when they think about their investments.
Well, David, with that in view, so seeing an escalation as being having high probability, how long do you think that would last if that scenario plays out? And then also, elevated oil prices, how do you see that impacting, say, the stock market, the bond market, and even, precious metals and crypto?
Yeah, I think a high oil price obviously is not going to do anything good for the stock market or the bond market, for that matter, right? I mean, if oil prices shoots back up to 100 or 120, whatever it is, bad news for the stock market, especially for consumer discretionary, bad news for industrials and so on and so forth. I mean, be bullish for energy stocks, but, that would be that. Like the bond market obviously won't like high oil price because they can assume that high oil price means high inflation, therefore more aggressive Fed. So I think, and gold, gold has another problem, which is that gold has been sold steadily by, I think, countries like Saudi Arabia and UAE and all these countries. And then if these countries, this war has left these countries in a very poor financial situation. And I think that I strongly suspect they've been selling gold in order to finance their budget deficit. So I just think that the continuation of this war in whichever form and higher oil price is just bad news for all financial assets, except for cash. And it's actually for the dollar is actually reasonably supportive because the U.S. is relatively speaking energy dependent. And I do think that, if push comes to shove, if oil price goes up, you know what Trump is going to do? He's just going to, impose, export embargo on oil so that American oil companies will no longer be able to export oil, which means that oil price will collapse in the U.S., which means that the rest of the world will see a massive increase in oil price. So, therefore, this is why if I'm long Brent oil contract, which is traded in Europe, I wouldn't want to be a long U.S. oil contract because for that reason, Trump can try to screw me if I were to, as he would, I think, in that kind of situation. So I think from that point of view, it's complicated. But what I think it's very important to understand is that there is no way out. I mean, Trump has tackled everything from trade war to everything. This guy basically makes a mess and he always gets out nicely when the stock market goes down, that kind of thing. But in this case, again, maybe you have maybe your viewers have a different view about the reaction function of Trump. In my humble opinion, when it comes to accepting total defeat for the United States or basically escalate, I think it will be easier for Trump to escalate, especially given he's not seeking re-election. I think the midterm is going to be a travesty for the Republicans anyway. So Trump really doesn't have anything to lose by escalating, in my humble opinion. And escalation just means higher oil price.
Well, if you mentioned taco, the term taco, could you just explain briefly to the audience what you mean by that?
Taco it's an expression that's become very popular on Wall Street that refers to Trump always chickens out. Okay. So, it sort of started last year during the whole trade war, the taco, and it was an expression coined by a Financial Times journalist that has gone absolutely, in fact, it's become probably one of the most used expressions, I think, in the financial market in the context of Trump's many, many, many capitulations. And Trump always chickens out.
You'd mentioned, so if he ends up not chickening out in a situation that we're in now, right? Because he's essentially, his hand is forced, and oil prices stay higher for longer. It impacts the global economy negatively. Do you foresee the potential, even if precious metals decline temporarily, that they could kind of rebound due to the fact that, prices are rising faster and maybe consumers and foreigners would want to protect themselves as far as purchasing power? Or do you not see that as much?
Listen, I own some out of money gold call. So I've been saying that gold probably has limited downside of 4,000. I mean, I think 4,500 is a different story. I think at 4,000, clearly there were very strong bidders for gold, which I suspect to be, central bank, essentially sovereign players, maybe China. I have no idea, but it's also true there's been no follow-up. I do think whether gold, what we've seen over the last week or two in terms of the run-up of gold, I think a lot is riding, less of it is riding on what happens to oil. More of it's going to be riding on what happens to the AI bubble. Because in my humble opinion, while I think that oil should be higher, I think the AI trade should be much lower. I think this whole bubble I think the bubble is just getting bigger and bigger. And I think when that bubble bursts, the U.S. economy is going to get absolutely whacked. And that's when the dollar is going to basically go to the floor and gold is going to take off. So I would argue that the biggest problem for gold over the past, 6 months has been the AI trade. Okay. But if the AI trade, basically hits a brick wall and basically, I think that will be, and I suspect some of the run-up in gold that we've seen the last 10 days is probably, related to the fact that I think, July, the AI trade had a very poor month. And then people are starting to think that maybe we've seen the best of the rally. And maybe that's why gold has gotten a bit of some support from asset reallocation.
Yeah, you're right. Gold recently did have a bit of a bump. And that's a great segue into the topic of AI. Thanks for, mentioning the AI bubble. What is your perspective on that as far as, I'm assuming you're saying, hey, AI is overvalued right now. At least a lot of the equities are. What do you see as being maybe the catalyst that unwinds that causes that bubble to deflate? And what do you think is a good timeline for that? Or
I want to make this very, very, sort of accessible to everybody. So
Sure.
I'm going to avoid using any technical jargon, but I think the important thing is this. Okay, listen, I just want to say, I'm a big AI user. I don't think I can live without AI. So my being bearish about the AI trade has nothing to do with what I think about, the usefulness of AI. Something could be very useful, but will be very difficult to monetize. And that is my biggest problem with the AI trade, which is how these AI companies are going to be able to make money from this technology, which is sort of where I'm sort of coming from. Let me tell you this. Like for me, I mean, it's interesting. Last week we got we had a bombshell. In fact, I would say that last week we saw like the most important piece of, I think, news that I've learned all year was actually when Microsoft, file, essentially the Microsoft file a disclosure to the SEC, disclosing that guess what? as much as 70% of Microsoft's AI-related revenue comes from just one single company, which is, of course, OpenAI. Now, let me tell you this. I long suspected this to be the case, but until the numbers actually came out that Microsoft decided to finally disclose this information, I wasn't sure. But now we know that 70% of Microsoft's AI revenue comes from one company called OpenAI. Now, I think it's probably fair to say by extension that if this is the case for Microsoft, probably 70% of the AI-related revenue of Amazon, the other major hyperscaler, is probably Anthropic. Okay. Which is to say that the AI revenue, that AI revenue in general, most of it is coming from these two companies, OpenAI and Anthropic. In other words, like people who subscribe to OpenAI and Anthropic, that business, that subscription business, whether it's retail or corporate, whatever it is, basically forms the bulk of the sort of the revenue, that has the AI as a technology is accruing. Now think about that. That's on the revenue side, right? On the cost side is these hundreds of billions of dollars that the hyperscalers are sinking into, essentially the chips and everything else to build out these data centers, right? That would power these things. Right. So what we need to understand is this. So think about it this way. You have in the AI ecosystem, you have the large language models, which are, let's just say OpenAI and Anthropic, and then you have the hyperscalers. So the model guys pay the hyperscalers for renting their computing power, to run their models. And then the hyperscalers then spend money, on buying chips to build data centers. So they basically pay, let's just say, NVIDIA or Micron for chips. And then NVIDIA then basically pays TSMC to actually make the chips. And then TSMC then have to buy machines from like Applied Material, ASML to essentially build the chips. So that's pretty much the sort of the revenue stream, if you like. So far but obviously the whole entire CapEx cycle depends on one single assumption, which is that the revenue at OpenAI and Anthropic will be going up so much that there will be so much money to come around that this thing is going to more than pay for itself. That's the bottom line. So what do we actually know? I've been arguing now for months that OpenAI and Anthropic are actually in deep shit. That actually they're not making, their revenue, their revenue instead of accelerating quickly are probably decelerating. And this is, and because they're privately held companies, they're not required to disclose their financials, not in the same way that publicly traded companies are. Therefore, Wall Street has no way of actually figuring out how these guys are actually doing. But let me tell you this, I think logic by itself tells me that these guys are doing very poorly. And the reason is very simple. At the very high end, because these guys have, they have Anthropic, OpenAI, they have lots of different models. Their most advanced models, the problem they've run into is, of course, security. These models, these most advanced models, are capable of hacking, basically networks, essentially launching cyber attacks and so on and so forth. This is the reason why even the U.S. government, as much as Trump wants to basically, Trump wants the U.S. to take over the whole AI race, even Trump is hesitant to give the all clear to these models because, I can guarantee you within 3 months, there will be a major cyber attack launched by one of these models against U.S. government, by the way, or the Pentagon, even for that matter. I guarantee you that. This is the reason why these most advanced models are currently all under restricted access. So, in other words, that OpenAI, there may be very good models. I mean, there may be capable. I don't want to say good because good is good depends how you actually define good, but they're capable models. But right now, their developers are not in a position to monetize them to the extent that they're under restricted access. In fact, the word has it this week is that OpenAI has just basically put a pause on the development of their next generation model, which was called Astra, because essentially security concern. So this security concerns that these models are so good that they're going to be attacking, networks and launching, cyber attacks on governments and everything else. That's become such a serious concern. It's a real concern that that in a way that what is happening is that it is actually limiting the accessible capabilities of these models. So in other words, very difficult to monetize them. Okay. Now, if you look at all the other models of OpenAI and Anthropic, the Claude or whatever, their biggest problem is that the Chinese are eating their breakfast and lunch. Okay. Because the fact is that, if you look at the top 10 models in the world now, 5 of them are Chinese. Okay. If you look at the top 5 most popular models, they're all Chinese, actually. In fact, if you look at the Kimi, the model that attracted a lot of attention recently is this model called Kimi K3, is a Chinese model that actually is as good as, ChatGPT 5.6 and the Claude basically Fable, according to a whole variety of metrics. And guess what? Costs only 40% less. Okay. And so as a result, what's actually going on is that forget about Chinese companies, many American companies now are moving to adopt Chinese models because they cost a fraction. In fact, DeepSeek 4.0 costs only 10% of how much it costs to basically to spend a token on a ChatGPT top advanced models.
David, you were talking about kind of China's intrusion into the AI market, how they've dominated it and how they've been driving costs down. Do you want to elaborate on that a little bit more?
Yeah, so what's really happening is that, we have to remember, first of all, the US had imposed sanctions on the export of advanced, chips and, equipment to produce advanced chips to China. So for the last 3 years, China has had to essentially develop their own chips and to basically develop their own chip manufacturing tools, if you like. And guess what? These guys figured out they're ramping up very quickly. I'm not saying that they're already there, okay, in terms of where the US is at, but they manage, okay, to basically make huge progress. What is it, especially in the software domain, because the fact that their models now have the same performance, can achieve the same performance as the top American models, and without having access to the most advanced chips, that can only tell you their actually models are better than the American models. So, people say, I live in Israel, and, here we said, literally necessity is the mother of all invention. The fact that the Chinese have been put on a diet by the Americans have actually, guess what, have made the Chinese more hungry, more aggressive. And I think from that point of view, I had to say, I think even Elon Musk actually, admitted this a couple of weeks ago that the Chinese are literally what the Chinese have done is really, truly impressive. But the bottom line here is this. What I'm just saying, there are 2 things going on here. I understand most people who are listening to me are veterans. You're all basically patriots. But you know what? Take your patriotism aside. Look at, because there's your patriotism and there's also then your money. These are 2 different things. You can't eat patriotism. And if you want to basically invest in patriotism, then, are you willing to? You've already basically invested your whole life in promoting American power. Do you really want to, basically invest your money in that as well? But the bottom line here is my 2 big themes here. And think about this, is that the US currently are locked into wars. Okay. One is with Iran, where Iran right now has the strategic upper hand. Okay. And this is going to be bad news for basically, for the bond market, for the stock market. And the other basically war the US locked in is basically a tech war against China. And the Chinese have caught up very, very quickly. Okay. Which really threatens, I think, the whole, essentially the AI bubble. And let's put it this way, forget about anything else. If the AI bubble goes the same way as the .com bubble, I'm telling you, the US economy is going to be toast. Okay. And the dollar will be toast. So from that point of view, these are 2, I think to me, these are the 2 biggest stories. Okay. They have a geopolitical dimension, but they have an economic dimension. They have a technological dimension, and they have very long-term, essentially, struggles. And I think that from that point of view, like, in a way, ironically, if the US loses both wars, it's very bullish for gold because the dollar will be wiped out and everybody will be moving towards gold. So if you are bullish gold, for example, which I know a lot of people are, if you're bullish gold, you're just hoping that the US will lose both battles. Okay. Especially given the fact that, again, we have to remember, this fiscal year in the US is coming to an end very soon. The budget deficit is going to surpass $2 trillion for the first time. And Trump is now saying that we cannot win over Iran because we're not spending enough money on defense. U.S. spends $1 trillion a year on defense. Iran spends $10 billion a year. Trump is now saying that, we cannot basically finish off Iran because we're just not spending enough. We need to now spend $1.5 trillion. So he's now trying to get Congress to increase defense spending by another 50%. Which is going to grease a lot of basically all these 5-star generals who are going to be who are already parachuted to Lockheed Martin. They're going to pay even more money. The point here is that this is a very slippery slope. The fiscal situation is already out of control, and then the repercussion of this war could be that we're going to spend even more, which means the debt dynamics is going to become even more unsustainable. And that is very bullish for gold. So I think in a way, the gold is the best protection or hedge against essentially the end of the American hegemony as we know it, especially under Trump.
Now, I wanted to touch on, I do want to talk about gold in a little more detail with you, but I wanted to touch on the AI bubble just briefly again before we pivot to gold more. You had mentioned that you see that unraveling really, not immediately, but soon. Do you see the potential attack on the U.S. government by, some sort of a AI structure, or maybe it could just be the decline in earnings of a lot of these companies that have been hyped up, or the Chinese competition? Do you see that as being the catalyst that would cause that AI bubble to really deflate quickly, or something else?
I think it could be a combination of things. It's difficult to say because what is going on right now is that we know there are serious problems with the whole AI, ecosystem. But it's also very clear that some people, are so invested in it, they want to keep it going because they understand what it means for themselves. I mean, and this could possibly mean Trump and his own family and his friends, some of the officials in the administration. Because that's what it comes down. When Jensen Huang, the CEO of NVIDIA, like myself, he's actually a Taiwanese, he actually, when he came out and said that he was considering basically providing OpenAI with a $250 billion guarantee. You ask yourself if this is out of essentially the patriotism, charity, or he's doing it for NVIDIA. Because any issue, any hiccup at OpenAI that actually forces the hyperscalers to pull back will actually decimate NVIDIA, who's a company that has been the biggest beneficiary of the whole entire AI boom. So what is really going on is that all these companies right now, they have their hands in each other's pocket. They want to keep the party going for as long as they can because they understand that when this thing breaks, it's like, wow, this is going to be crazy. I mean, and this is as true for Microsoft and Google as for anything else. Google is really the most vulnerable company in this because 60% of Google's revenue comes from search. As good as Google search may be, it is not even half as good as, a mediocre AI. I mean, these days, when I have a question, I go right to basically. So in a way, the commoditization of AI is going to be deadly for Google. And this is also the reason why Google is pouring money into AI right now because they cannot afford to be left behind because if they're left behind, it's game over for them. So what I'm saying to you right now is but the market cannot differentiate right now. It's wow, these people are investing because it's going to be, it's because the future is bright and then there's so much money on the tree right now. That's why they're investing. Or that they're investing because they've got no choice. That if they don't, they're completely screwed. I think that the market right now is thinking it's A as opposed to B. I think it's more like B right now. But that's what's prolonging this. But I think, this is also the reason why the Chinese angle is very, very important. Because if the Chinese continue to gain market share at the expense of OpenAI and Anthropic, and then we have a couple of basically major cyber attacks that could really force the market to reassess the entire picture.
That's a really interesting perspective that you're giving, David, because when you think about it, like particularly talking about the vulnerability of a company like Google, a lot of them are, they receive a lot of their revenue on ad spend and on searches. And so if you have AI come in and disrupt them, they could really lose value quickly. I'm thinking of Meta too. And a lot of businesses that are dependent upon that also are going to have to quickly shift really to AI. It's an interesting perspective you give on that, because you can see that vulnerability when you spell it out that way.
Let me give you another example. I mean, a personal example.
Yeah.
So we've been basically running an ad campaign to promote my book. Okay. And we've been running ads on Meta. And then we kept the ads running for the last 3 months. I don't know how much money we spend on it or whatever it is. Every day Meta's telling me, like, literally they're sending thousands of people to the site. Okay. So I thought, wow, this is amazing. Like, we're paying them like 5 cents per basically visit to the site. And I was like, wow, this is really like incredible. Meta must be an amazing company. And then, I was talking to my publisher. It was like, well, the book sales numbers don't quite correspond to the numbers I was getting from Meta. So I finally asked ChatGPT to look into this for me. And the conclusion we came to is that, ChatGPT either has been sending bots, that Meta has been sending bots to me, or very, very low quality visitors, because we discovered that they spend an average of 0 seconds on my site.
Right.
Once they visit the site. Right. They just get there and then basically leave.
Right.
So this is an example, like these monopolists, companies like Meta, they fleece average people.
Right.
Okay. I think in ways that are almost unseemly. And in a way that what AI is going to do is to basically take their monopoly to task. Because in a way that with AI, people are going to be able to set up their own companies much more quickly. Okay. You don't even need any kind of startup costs anymore. You have 2 guys. You don't even need to know how to basically program anything. Literally. You can now use AI to set up the basic infrastructure. I can tell you this is certainly very true on Wall Street, where people like smaller hedge funds are using AI to build up the infrastructure of much bigger hedge funds that took 10 years to basically build. Now they can basically build it in 2 weeks with 2 guys. Okay. So I think that would be a good thing. So from that point of view, I see AI as a liberating agent. Okay. But as a liberating agent basically means that the US tech monopolies are going to be in trouble. And to the extent that the US tech monopolies basically account for the bulk of the US equity valuation, when they go down, I mean, you don't even want to think about what's going to actually happen after that.
Right. And that then segues into what you were talking about with gold and precious metals. And that is maybe some of the money coming out of the AI trade recently has contributed to the bump in gold recently. And that is a long-term trend, especially if kind of these geopolitical events unfold the way you're seeing, potentially that they could have outcomes. Gold prices could go much higher. The dollar could go much lower. What do you anticipate as far as what the impact of these geopolitical events? Do you believe that it's going to have the most impact on precious metals, or do you think other equities or commodities or even cryptocurrencies are going to benefit from this as much, or not?
I think crypto is all about whether Trump is able to pass through this crypto bill that's necessary to essentially help legalize the usage of crypto. And I think that right now, I personally, honestly, I don't even think Trump cares that much about essentially the Bitcoin. He cares a little bit about He basically cares about stable coins. I think that much is clear, because stable coin also, it sort of promotes a digital, essentially the dollar. Okay. And it helps the dollar to claim hegemony in the digital space. But Bitcoin, to the extent it actually competes with the US dollar, I think Trump has no incentive. And in Congress anyway, and right now, we're already in midterm election mode now. There's not going to be appetite. So I'm not that. I think crypto, I don't want to go there because I don't think it's an investment for everybody. It's basically for traders. I don't think there's a viable. I think there isn't a viable investment thesis. Okay, gold is a different story. I think gold is about alternative to the U.S. dollar, and because people want to reduce the exposure to the dollar, and then because the euro, the yen, the whatever, the Chinese yuan are not real viable alternatives. The only alternative to the U.S. dollar is gold. So this is why, I have no doubt, gold is going to. Gold will do very well if. Again, you got these two battles right now. If the U.S. loses one of the two battles, that's already pretty bullish for gold. If the U.S. loses both battles, okay, then gold is going to go through the roof.
So you see right now precious metals as having a great, value investment opportunity, a lot more than AI, right? AI is kind of more risky trade, and precious metals and maybe some of the stocks that invest in that are more, again, this isn't financial advice, but that's kind of more of a undervalued sector right now.
Is that? I don't know. I think with gold, it's not about valuation. There's no valuation, what does that mean anyway? Because it doesn't generate any cash flows. So there's no way to even value gold in a way that you can with other assets. But what you can say about gold is, again, and what I'm saying is this: gold is an alternative asset to the U.S. dollar. And if I'm right, again, this is an if, there's an if in there. I think I will be proof right, but when I'm proof right that the AI bubble is going to go bust, that's when gold is really going to take off. That's all I would say.
Okay.
So I think the timing of this, when this is going to happen, it's more difficult to say. But because, the market sort of has been very blind to some of these issues. And But that said, I think the fundamental story is there. It's very solid. I have no doubt. I've been doing this for a very long time, so I am very, very convinced that my thesis will come to pass eventually. I'm hoping it's going to be by the end of this year. But can it basically drag into the beginning of next year? It's possible. Anything's possible. But that's when gold will really take off. I just want to basically say this.
Yes, and as you know, and you've alluded to, a lot of our viewers are, in fact, active duty or veteran military. The way that they invest, and again, this isn't investment advice, right? This is just for educational purposes. The way that a lot of active military and even government employees invest in their retirement is through the government's thrift savings plan, and that doesn't really have like a gold or precious metals option in it. What is a way, in your opinion, that would be the best way for kind of the average person, average service member, whatever, to be able to get a little bit of exposure to precious metals, to put a little bit of money in that?
I imagine they can invest in ETFs, right? They can invest in ETFs. So there are ETFs that are linked to gold, right? Essentially GLD.
There are, yeah. Right? You recommend that though over, say, or you would say that would be a smarter way to do it over, say, owning it physically because it's more convenient? Or
if you're a serviceman, the U.S. government is not going to screw with servicemen. So if it comes down to if they're going to start to confiscate people's gold, whatever it is, the last people they're going to confiscate gold from will be servicemen who are basically veterans. So I don't think veterans have nothing to be worried about. I think when it comes to holding paper gold as opposed to physical gold.
Okay. Well, David, this has been really helpful to all of us. We've really enjoyed this. How would any of our viewers, how would they follow you or read your work? What's the best way to do that?
Yeah. So listen, I retired from Wall Street 5 years ago in order to share my knowledge, I think, with everybody. Literally everyone. It was embarrassing for 20 years because every time my wife introduced me, she would say, "Oh wow, my husband. Oh, what does he do for a living? Oh, his job is to basically help rich people get even richer." And I thought that enough was enough. So now I'm actually devoted to help essentially equalize the playing field. So you can basically follow me for free on YouTube. Actually, I've got my own channel there, in David Woo Unbound. I publish a video every Sunday. I talk about sort of medium-term views and whatever it is. And if you want to basically follow me a little bit more, you can sign up for my very, very inexpensive, essentially subscription model at davidwoounbound.com, which is $400 a year, which again is dirt cheap, just basically literally throw away money. So, So that's so these days that's what I do.
Great. And just as a reminder for those that maybe weren't here for the first part of the interview, David has released a book recently called Merry-Go-Round Broke Down, which is a U.S. News bestseller. And, go ahead and take a look, get a copy. He's got a wealth of information to share to help, like he said, level the playing field. David, it's been a real pleasure having you. Thanks so much for joining us. And hopefully we'll have you back in the near future.
Great. Thank you very much for having me.
Yeah, it's our pleasure. And to the viewers, thanks for watching. Please remember to like and subscribe.